For more on the markets and the retail trading activity, let's bring in J.J. Kinahan, CEO of IG North America, who's going to single-handedly add to all of this this bullishness to the point where, J.J., it's getting, you can cut it with a knife at this point, which makes me uncomfortable. But you don't see, at this point, you see almost all tailwinds, very few headwinds for the market.
Well, it certainly does look that way, Joe. And I would kind of say that we probably have tailwinds through maybe the State of the Union address in January, even, or when Trump makes his first speech in terms of what his plans are on the campaign trail. Obviously, every candidate talks about so many things they're going to do, but we'll see what the actual priorities are when he does get up and speak. I found you guys' conversation, before the break there really, really interesting in terms of a couple of things. Obviously, Bitcoin, what's going on there has been amazing, up 5% since President Trump got elected, and now over $100,000. We'll see if it can continue to carry that momentum. And in terms of growing into earnings, I think that is where most people's, hope lies in the fact that, again, I think maybe there's even a misunderstanding about regulation. People are like, oh, business people don't want regulations. Of course, everybody wants regulations. But when the government employees are growing at a faster rate than private company employees, people, when they go to work, want to do something. So you just had so many more people coming in, trying to do things, trying to do new regulations, et cetera. And that really is where the issue was. I think a lot of people, this new DOGE committee or, whatever we're referring it to, coming in and trying to just make the government more efficient, not just on spending, but in terms of, how many people you have coming in, maybe overlapping in what they're asking you. I think that's what the business community is really welcoming more than anything else. And that's where I think a lot of the hope of us continuing to grow into earnings comes. And then the last thing I'll say to that is think about AI. All hundreds of millions of dollars were spent on it. The question 6 months ago is, what are you going to actually do with this? What can we show for all this spending? And I think we're finally starting to see some of that, not only in the tech industry, but if you think about medicine, et cetera. That's where I think a lot of the hope for our next wave comes from also.
We talked about that yesterday. If there's one area that for humanity where AI, I can just see multifaceted benefits to all of us, and that's certainly healthcare. But I guess, JJ, you mentioned it, grow into, and that's what we're talking about, because, the market's not cheap. You follow mostly trends, so I don't. A lot of times it's hard to see a trend reversal coming, but
right.
With how richly valued many things are, and I guess that the soldiers are catching up with some of the generals, some of the Mag 7. But overall, we're still at pretty high levels historically in terms of valuing stock prices versus the underlying earnings. Can that continue?
I think it can for a while. What I'm really interested in, Joe, is going to be the last 2 weeks of the year to see if people start to take some profits this year when you know what the tax rate is. Not that we necessarily think taxes are going higher, et cetera, but are people going to take some money off the table heading into the year? Let's face it, S&P 500, I believe, was his 56th record yesterday. That just, you and I have been doing this a long time. We know that just doesn't continue to go and go and go. So, like I said, I believe that in the shorter term, we can continue to do this, but there may be some pressure at the end of the year. I think there may be some pressure right after President Trump takes office. You and I talk about the VIX quite a bit. The VIX is certainly saying, it's a very clear path, barring some crazy unforeseen event through the end of the year. With the volatility under 14, or the VIX measure, I should say, under 14, that's pretty amazing, and you don't often see that. You tend to see it in one of two things. Either we continue higher. The VIX theoretically is working as it should. When markets go up, volatility should go down, and that's what's happening. But the other thing is when markets are stagnant, also the VIX stays at a low level. So I'm not quite sure if maybe that's a little bit of it, if perhaps the market's just thinking we could also just stay sideways for a little while.
Talk about a trend, though. The VIX is at 13 until it's until it's at 30, like the next morning.
Well, again, as I said, an unforeseen event in the shorter term. Again, as we both know, these things.
It's not predictive. It's not. I don't even see how you use the VIX as being predictive, since it's possible for it's so volatile. It could be. You saw that chart where didn't we get almost to 40, and nothing even really happened. I don't think. Last time it went up, there was a growth scale.
Yeah, that was
it was a growth scale.
When we did that one, that was also overnight trade where the VIX actually, once markets opened, VIX sold off that day. But yes, I agree. It's not 100% predictive, but it is also when you start to watch that in conjunction with, you talked about gold, you talk about bonds. When you start to see people coming in, we saw people turn to bonds yesterday with the, uncertainty in France, et cetera. I don't think that's something that's going to continue. But when you start to see these trends over a few days with those three things together, that's when you start to say, hey, maybe there's something here. We just haven't seen that.